Need a lamp, and we can shine on us.
Okay.
That little one
As soon as Harvey and JR get back, we can get going.
Focus and straight.
Your phone.
No.
Okay. Let's try that. Let's try this. I might have to put it behind the computer.
Go ahead and mute your microphones if you're not speaking until it's your turn to do your part of the presentation. Thank you.
Okay, I think we can get going now.
You want to give it a little more time for more people to join in, or?
We have, let me see here.
They'll start joining in.
Yeah, it looks like we have a few people joining in now. All right, good morning, everyone. I'd like to go ahead and welcome all of our participants and thank you for joining today. So for those of you that are not familiar, my name is Sarah Ishag, and I will be one of the moderators along with our CEO of Wall Street Research, Alan Stone. As many of you may already be familiar with Wall Street Research, we are a 35-year-old research and investor relations consulting firm. And we've been running these roadshows for a number of years now and recently transitioned to the virtual show. So today we're presenting our client company, High Gravity Resources, LLC. HGR has been involved in the oil and gas drilling industry for a number of years, developing successful wells throughout South Texas. And the company has an established network of industry colleagues, including geologists, operators, and drillers. Today, specifically, the focus is going to be on their current project, the Buck Creek 3D Development LP, which you'll hear more about shortly. So we're going to have the owner, Doug Shea, along with the co-owner, Josh Walters, and the special guest geologist, Harvey Howell and JR Rodriguez, all present the firm today. So following the presentation, Alan will present a series of questions prior to opening up the Q&A session. So to all of our participants, if you have any questions, feel free to add those as always in either in the chat box or under the Q&A if you want to add it there. And we will attempt to get through as many of those as possible. And with that being said, I'll go ahead and pass it over to Alan so we can get started.
Yeah, thank you, Sarah, and good morning, good afternoon, everybody. Thanks for joining us today for the ongoing Wall Street Research virtual webinar series. And we're very pleased to have one of our clients back again, High Gravity Resources. We've known these folks for some time now, and met up years ago at a presentation in Las Vegas, and have followed some of the things they've been doing and some of the ventures they've been involved in and some of the oil and gas drilling projects. And they've been involved in the oil and gas industry their whole life, and a number of very successful drilling projects in Texas, and particularly in the Southeast Texas region. And they've also had a long working relationship with HHH Howell and Company, which is a third generation geology firm in Texas that has been very, very successful over 3 generations and discovering oil and gas, and has developed some of the top technology in the industry with 3D seismic and their geology team, and have had a very successful record in drilling oil and gas, particularly in in the region where they operate currently, this Lavaca County, which is a very prolific county, and there's been ongoing success there for over the last 25 years. So, so at this point, I'm going to turn it over to Doug and to Josh to give some background on their company, on high gravity resources, and then also to Harvey and JR to talk about the H.H. Howell and Company and the geology and the formations. So again, thank you for joining us today. We have a very enlightening project now in oil and gas, and with the higher prices that have everyone's seen in the last 60 days in the oil and gas prices. I think now is the time to be able to participate in this industry successfully. All right, I'll turn it over to Doug and to Josh.
Okay, hey, again, hey, my name is Doug Shea. This is Josh Walters, my partner, one of the partners in the company. And we just wanted to thank Alan and Mark and Sarah for putting this together. And as Alan mentioned, we met many years ago at either a money show or a Freedom Fest or some type of other investor conference, but certainly appreciate the opportunity. High Gravity Resources, just to give you a little background, Josh and I and Greg, who's the other partner, my brother in the company, Josh and I worked on the financial side as brokers for many years in offering oil and gas, real estate, different products. My brother was on the industry side, ran drilling rigs, primarily in Kentucky, but some in Texas. But in 2012, we decided to start our own company and do things for ourselves. And actually, Greg and Harvey met each other prior to High Gravity being established, and has kind of been the basis for our ongoing relationship. But our whole goal is to try and work with different geologists. We work with Harvey quite a bit. We work with other geologists in Texas to try and put together projects that will be beneficial to the partners. And the one we've put together today, called the Buck Creek 3D, is with Harvey Howell and his associate geophysicist there, JR Rodriguez. Harvey and his family have direct success in the area, not far from where we're drilling the Convicta. We'll get to that here in just a little bit, but just wanted to share some of what you're going to be seeing today is going to be technical, but it is, it's our job to try and, get it as explained as simple as possible. The main point is to convey that the technology that is available today, the 3D seismic, is just a tool. It's combined with the subsurface geology that Harvey and his team do to make a complete prospect. There's many hours put into the developing of a single prospect, whatever it may be, and this one's no different. Josh, if you will.
So we're going to begin sharing our screen here, and we're going to open up with real quickly what it is. Our focus is always to find, make it as easy and have as much success as we possibly can in every prospect we put together. And in doing so, we have put what I believe is a phenomenal program together for a lot of individuals. We've got it's a unit, very basic unit price of $57,000 for drilling and testing completion with 1% working interest. We do have some estimated reserves that of 11 billion cubic feet of gas and over 500,000 barrels of oil. What at today's prices, that's close to a $57 million value that's in that area for us to go after. Primary reasons a lot of our clients, and when we continue to do this, is another aspect of the investing in oil and gas, is that a lot of individuals that are high net worth individuals look for tax savings in some way, shape, or form. And with oil and gas, it's one of the largest benefits that's out there. It literally will save you somewhere between $15,000 to $17,000 in taxes. And then understand that there are risk factors. And our job today is to explain to you what we do to lower those risk factors, to give us a higher probability of success in drilling wells.
Here, well, this is just a map of Texas, obviously. The red is Lavaca County, and this is blown up a little bit to show you where it is. The drilling rig circling around, that's pretty close to where we will be drilling. And as you can see, Lavaca County on the left-hand side, very prolific, going back to 93, which is straight from the Texas Railroad Commission. Over 52 million barrels of oil and 1.5 trillion cubic feet of gas have been produced, and we intend to hopefully add to that number. Okay, so the Buck Creek 3D project, the proposed well is called the Convicta number 1. It will extend the original Hallis field, okay, the Burns channel was discovered there, into the next and potentially largest fault block. To date, 3 of the fault blocks, there's 4 at least, but in succession, 3 of the fault blocks had established production from 3 recognized channel sands, the Burns sands, which is our primary target, but secondary targets are the first and second Allen sands. Prior to 3D seismic and what are called AVO attributes, lower Wilcox Channel drilling success between 85 and 2015 using 2D was about 31% up at Campbell Creek, which is where we have a couple of wells with Harvey. Okay, by comparison, there's a field called the Senor Nest field. It was discovered utilizing state-of-the-art Sitel 3D data, and the 9-for-9 success rate is very remarkable, and that is, look, at the end of the day, that's the goal. You know, we want to try and take the data that Harvey and his team and JR have been working on to process and delineate and get us to the point where we can go and find these prospects and go out and be successful for the company and for the investing partner. Okay, Harvey and JR, if you would maybe just give a brief background of kind of where you're coming from and what you do.
Be glad to. Thanks, Doug. So I'm Harvey Howell. I grew up in the oil business. My grandfather operated across South Texas as H.H. Howell, and my father took over from him. They had a small drilling company and drilled wells, many for our own properties, but also we contract drilled and drilled our way, you might say, into other generating properties. I roughnecked on drilling rigs when I was in high school. And in fact, I was on a well in Hallettsville when we made one of the first Lower Wilcox discoveries. And we'll talk about that in a minute. So I've literally grown up in the oil field, and I'm 65 and plan to keep doing it for a while. And JR is going to talk about himself.
Yes, my name is JR Rodriguez. I'm a geologist / geophysicist. I graduated from Texas A&M back in 2000. Since then, I worked for Halliburton for a couple of years as a wireline engineer, and then moved my way up to working as a geologist, geophysicist for several companies here in San Antonio. So my expertise here has been primarily in South Texas, Gulf Coast area, using 3D seismic in particular, and really, looking at seismic amplitudes and AVO analysis. So we had quite a bit of success, using AVO and seismic amplitudes to drill some of these wells. And I've been helping Harvey here now for the past 2 or 3 years. And this is a pretty exciting project that we're working on here.
Yeah, we're very excited to bring it to the forefront and to our partners and the group that's looking at it today, and Alan Stone's group as well. We're going to let Harvey and JR explain the geology behind everything, all the maps, cross sections that we will go over. And so we're going to let the experts explain what we're doing and why we're doing it. So Harvey, this, I believe, is your bird to go with right now.
Sure, great. Thank you, Doug. Or that was Josh. Josh, I'm going to get you to help me by pointing at certain wells as we move around. So the map that he's on the left-hand side that Josh is moving the arrow over is a map view of a sand that we discovered with the next well. There's a well right there the arrow is pointing at called the Hathaway 5 to the southeast a little bit, Josh. One more southeast, east, the other way, yeah, south. Next fault block down there, right there. Hathaway 5 was an Edwards well. We were drilling for a 14,000 foot target, which had recently been discovered and proven productive in the area. And on the way down in that well, we stumbled into a very thick and unexpected, really, sand series, which we named the Burns Sand. And the Hathaway 5 produced in the Edwards for about 40 years. So to get this new sand, we drilled a twin, and the twin well was called the Treptow number 2. And that well is a twin to the Hathaway 5. The exhibit on the right-hand side is a cross-sectional view, and the cross-section is oriented from the left, which is called K, is to the northwest, where the beginning of the red line on the map. And there's K, and that's the proposed location we're getting ready to drill. As you move down the line, southeasterly, you intersect that well called the City of Hallettsville number 1. And we drilled that well in 1984. It's a directional well drilled and bottom holed under the golf course in the City of Hallettsville, hence the name. That well went on to produce 1.4 billion cubic feet of gas and 124,000 barrels of oil from the one completion. And if you'll go down, Josh, the one completion is that zone, which is the Burns Sand. There are some overlying zones which were not produced that had shows, not very well developed in that particular well, but are developed in other ones. And we'll look at that more in depth later. The next well there, the Hathaway 5, is in the middle fault block on this particular presentation. And then there is another well on the extreme south end, which is K prime, that produced not from the Burns sand, but from an overlying sand, which, there it is, thank you, which they called that the Simmons. Now that was drilled originally by Mobil Oil and is now called Capital Star. So they produced over several BCF from that particular sand. It is still producing. And downhole at the Burns interval, the zone is productive. They have still never produced that sand in that particular well. So what you have from right to left, going backwards from low to middle to left, and then up thrown one more fault block to where we're going to drill, you have 4 identified fault blocks. 3 have already been produced. The one we're going to drill has not ever been produced.
Okay, so geologically speaking, without 3D, this is definitely a prospect that our industry would move into and drill for a solid probability of production. Is that correct?
Yes, and in fact, there's 2 wells that we just breezed past. If you'll go back a point, there's one called the Allen 3. We drilled that well, and the Allen 2, that well. Both of those wells, I had just come out of University of Texas and was very interested in the rocks. So I initiated having both of those well whole cored through the primary zone of interest. And the beauty of a whole core while you're drilling or during the drilling process, you drill the well to the point that you want to investigate more closely. And we put in a core barrel and actually cored through the entire pay section in both of those two wells. And when you retrieve the core, you can orient it so that it is realigned with how it was in the ground. And the study that was done on those cores predicted that the channel, the center or axis of the best sand, which is in the channel, is between the two wells and oriented just like that line, northwest, southeast. So geologically, Josh, to answer your question, geologically, there was evidence to move northwest across the fault and drill the well we're going to drill now, but the acreage was unavailable. It was all held by production from the deeper Hathaway Edwards unit. And only in the last year and a half has the acreage become available where we could acquire it. And now we will go continue what we started in the 80s.
Okay. And so in reference to all this, what we're able to do is look at old and past wells and see their performance in these structures in between these fault blocks and give us a very good idea where we need to drill next. And that continues throughout the industry. So you can continue to look at multiple wells throughout the entire region to give you a better picture of what we're going to go for. And that is a result of the next slide that we're going to take a look at here. And we're going to go into some advantages. And JR, I want you to answer some questions as we go through this. But you know, the first and obvious advantage for 3D and its data set is having arbitrary seismic lines in multiple different directions. Now, what we looked at previous maps, that was just the geology work and looking at existing wellbores and finding where the trends go. So having arbitrary seismic lines, how does that help our industry pinpoint production?
Well, Josh, back in before 3D came along, a lot of the seismic work that was done was what we call a 2D, and basically it was just a big seismic one single line that would go through a certain length, and you would have one line going in a northwest southeast direction, and then maybe another line from southwest to northeast, and that would be the extent. You would just have those two lines, and then you would have to interpret what was going on where you didn't have data, and really the 2D lines were more of a for structural purposes. With the advent of 3D lines, it's like you have a bunch of 2D lines that are evenly spaced, going north, south, east, west, or however it needs to be oriented, and with that, then we can draw lines in any direction that we need to, from different wellbore to different wellbore, and we can study what the seismic is doing on some of these wells, and why there's sand in some and not in others. So really that was the big thing, because a lot of these amplitudes and some of the previous work that I've done, we were finding smaller amplitudes that were missed because they were that area was shot with 2D lines, and they just didn't have enough data to cover that. And with 3D, you're able to see more of the picture below the surface.
Yeah, and so that goes into our amplitude advantage that we have, is that we're able to identify now a lot of information that you would miss in the past having 2D or looking at reserves in 2D. And it brings in new sands and more reservoirs. Also, there's a significance to our AVO and amplitude versus offset. Can you explain what the AVO or amplitude offset is? What is that process?
So the AVO is basically, it's a certain type of seismic processing. It's not always done on seismic data, but when you have it, it's really nice to have. It helps understand, what you can find out, what kind of, fluids you're going to find. It's primarily a hydrocarbon indicator. And what we found from, different areas, throughout Texas is that typically where you have, a really bright AVO anomaly, that's usually associated with hydrocarbons.
Okay, and you can see that and throughout the data set that you would have. And another thing that allows, 3D seismic allows our geologists and geophysicists to understand is really how big of structure we have down there, or the anomaly that's down there, to determine whether it could potentially be economical. Is that correct as well?
Right, and that's also a big factor as well, because you can have, like I said, on a 2D line, if you had an amplitude that was there, you wouldn't necessarily know what the size of that anomaly would be, and you could possibly be drilling into something that's an acre in size, and that's what we want to avoid. So with the 3D amplitude mapping, that gives us an idea of what the sand bodies are going to look like, and we can have a better understanding of what works, what size of amplitude is going to work, or if it's if there's really nothing there. So I think that's a big key.
And then Josh, the other thing is our engineers love to be able to give us reservoir estimates. How big is it going to be? So that's the last thing that now that JR can show me how big an anomaly is, we can start doing some reservoir engineering and estimates of exactly what is the productivity going to look like. And that then finally you can calibrate the size and the reserve base and determine how many wells you think you're going to want to drill to fully develop it.
Right. And so what we're going to look at here is again, another cross section, an aerial map that covers our current prospect, which is right here at the beginning of I and the middle of J. And what we're going to look at is an immediate field to the north east of our location that there are productive wells. And Harvey, can you walk us through what we're looking at on this particular map? And
that is so that's a piece of a larger map, and it's located to the north of the Convica prospect that we're going to drill. And what Josh is doing here in the blue is orienting you again from northwest to southeast. So again, we've got a channel sand represented with the well bores, and the well on the left that he's pointing at, D, was a well drilled north of a fault. It was called the Kahanic, and the well found sand and actually produced for quite a bit of time, made somewhere just under a half a BCF. So it was not a bad well, but it was a disappointing well, particularly if you'll point a little deeper, Josh. Go back to that sand there that he's pointing at is about 100 feet thick. And we felt like when we drilled the well that the reserves on that sand, which we call the Gulch sand, would have been similar to wells about 3 miles south and east, and those were tremendous wells. So when the well only made a couple hundred million, we were very disappointed. The next well, that well called the Pavliska, was drilled after the well on the left. And what we were doing was moving south and east, and unfortunately, the well cut a fault and faulted out the primary objective. So the objective was missing in that well. It faulted it out.
So people that are not familiar with looking at a geological map, what we're looking at here, these brown sections, these are actual faults or breaking breaking of the structures and separating the layers out there. Is that correct, Harvey?
That's right. So if you envision a roll of toothpaste and you squeeze all the toothpaste out onto your countertop, and then you take a knife and break what is now the long channel of toothpaste, each time you cut it, that's a break, and that would be the fault. And if you're unfortunate enough to stick your toothbrush into the place you cut, there's no toothpaste there. And that's what happened in that particular well. So the well was drilled and completely missed the zone, although we projected it continued, but it was faulted out. Then that well, the Belichick 3, was drilled, and that well nailed the channel sand. We call that the Burns sand. The well was drilled in 2007 and has made 7.7 BCF, that's billion cubic feet, and 361,000 barrels. So that's a very nice well. It's made somewhere in the neighborhood of $60 million worth of gross product. That's a well that we drilled, and that's the most recent well drilled in the area. We drilled that in 2015. And we also found the sand, the Burns sand, and completed, and that well has made 1.6 Bs and 54,000 barrels. It's still producing, and we expect it will produce for many more years, but deeper. That's right. There's another 100-foot thick zone down hole that we expect will be productive. That's the Burns sand. Now, if you go up hole, there's a zone in orange, a little higher, orange, right? Yeah, that zone and that zone. Those are both productive and not tested in this Campbell Creek field area, but we recognize those as the first Allen and second Allen sands, which are among the primary objectives down to the south. So in that particular well, you've got 4 productive zones. We're only producing the Burns sand at this time.
Okay. And so what we're able to do now is that all these wells that Harvey is talking about, were they drilled with 3D seismic, Harvey?
No, this was all before the 3D seismic was shot. So this was drilled in the old way we used to drill, was using, as JR just explained, 2D seismic lines. And we would try and drill as best we could on the lines. We're limited. If you wanted to drill on control, you had to stay on the seismic line. If you moved off the line, you were drilling, you might say, almost blindly. So you're confined to drilling on seismic line, and you had no idea of aerial extent and some of the other factors. So in hindsight, the left-hand well, the Kahanic well, would not have been drilled, we now know, because the aerial extent of the reservoirs is small to such an extent that it's a the well probably broke even, but just. The second well, the Pavliska, would never have been drilled. It's completely faulted out.
And we can see that now because there has been a seismic, which is the seismic information that we're using to identify our location, that was shot over this area. So we can now see, JR, what are called amplitudes and our mids and fars. Is that correct?
Correct.
Okay. So explain this map and this map for our audience.
So that line that you're looking at is the similar cross-section as the geological, but this is the geophysical. And what we're looking for here is, the amplitudes that are coming across in the productive zone. If you look at the Kahanic well, where it's circled, you see that there's nothing there. So that's what we'd expect to see. Not very much sand. Of course, the Pavliska is faulted out, but then when you get to the Belichick 3 and the Technic 6, you can see how that amplitude just blooms out. The Belichick 3, it's got a strong response in the mids and the fars. The Technic 6, there's still decent amount of energy on the mids, and it's got a strong response on the fars. So that's this is one of the the seismic attributes that we're looking for in the prospect.
Right. And so we want to look at a different, what nears and fars are, is that it's a sound wave that comes at a longer distance to the wellbore. Is that correct?
That is correct. Yes.
Okay. And a mid would be like a mid-range sound wave that would go towards the wellbore. And these are actual wellbores that we're looking at. So we can actually see what they drilled into and what they're producing from after a successful well is found. So does that give us a very good baseline to understand what we need to look for in this region and reduce our risk?
Right. And that's, what you see again here, here are the fars. As you move away from the mids, there's still nothing there in the Kahanic well. The, Pavliska is faulted out. But then when you move to the Belichick and the Technic well, you see that really bright amplitude. And that's, that's what we want to key off of. And that's what I was, focusing on is making sure that at our geological interval of where we project the burn sand to be, that we have to have this type of response. We have to have, a fair to strong mids, but the key here is going to be having a strong far reaction, in that interval.
So would you agree that having these types of signatures and what we're looking for in an immediate area gives us a very good idea what we're going to have to look for in any prospect in the future?
Yes, yeah, that it's going to be key. That's
okay. So now it comes to what we're doing today. You can see where our prospect starts up on I. And again, this is the same type of information we would gather drilling. And we know not structurally, but geologically, this well should be drilled just on basic geological work. Is that correct? And trend work that you would do. Is that correct, Harvey?
Yeah, so we discussed that the wells that were whole cored, including the Allen 3, which is on this particular cross section, called I to the northwest and I prime to the southeast, are 4 wells. The left-hand well is once again the proposed Convica location, but now the next 3 wells are all within the same fault block, so they are the nearest producers in the channel to the well that we want to drill, also in the channel, but simply across the fault, which we call the Pavliska Fault. And the Allen 3 made a wonderful well. We drilled and set protection pipe through the first Allen sand. There is a second Allen sand, which was also productive. And then the burn sand, we actually put the core barrel in and whole cored that zone. The well was originally completed in the 2 Allen sands, and then the overlap where the large string and the smaller string where the overlap occurred mechanically failed. Now this is 30 something years, mind you, after it started producing. So 30 years plus down the road, the pipe finally did fail, and we were unable to actually go get the burned sand in that particular borehole. The next well was the Allen 1, which is the middle well on this particular section. That was a shallower well to about 9,200 feet that I actually drilled when I was in high school. And we re-entered and deepened and got the 2 Allen sands, first and second, and the well was kicking so severely we could not get to the burns. And so we completed in the 2 Allen sands, and that well is still producing today. And then finally, the last well on the right is the original, that's the City of Hallettsville well that we discussed. So all 3 of those wells are within the middle fault block section, and crossing the fault, you get to the proposed location. And so now JR is going to describe the exhibit beneath the cross section.
Okay.
So that image there, that is going to be, the FARs, and what we see that's similar to, what worked on in the Belichick well and the Technic well is that we've got that amplitude that's present in the geological interval that's of interest. And you can kind of see that those purple and that gold colored, those are my mapping horizons. And one was on what we call the stack data set, which is the gold and the gold line. And then the purple line is what I use to map the FARs. And what I like to see is those coming together, and the FARs, at a prospective location. And so, this was a key factor in picking this spot.
Okay. And so again, we don't stop just on one line direction. We'll go to another direction. As you can see, there's a J to J, and we'll look at it again from another angle to verify information again. So Harvey, you want to walk through
Sure.
the J to J?
Of course. So now this is J prime. J is to the southwest in this case, and comes across 3 wells, hits that fault. There's a fault there called the Ranger Fault, and then it moves into our fault block. There are no wells in the fault block north of the ringer of the well, the well to the south. Move back to the south, Josh. There So that's the last actual penetration as you move northward to the proposed location. So this is a large fault block that JR has now identified for us with with the seismic, with the geophysics. It's a large fault block. There's a well called the Mass Check that is the last well on the right-hand side, J prime. So now working from that well, there is the little bit of sand, which were Allen sands, and the well made a modest bit of production, not a whole lot. Crossing that fault, there is the new prospect with what JR is indicating, and he'll describe it to you in a minute. But we project the sand to move across into that location just from the geological information we had earlier. And then as you move west, you see what happens. Our sands, which are the green and red ones, don't exist in the other three wells, partly because there's an unconformity, which is the nervous line, that brown line, which we call the base of the Lavaca Shale. And it's just a geological phenomenon. So the wells to the west and southwest were not prospective, but did indeed help us identify where the potential trap is and help us identify how large the prospect is going to be.
Okay, and so on the geophysical side, JR, what is this telling us on as far as mapping and identifying the structure?
Well, this, again, here we have a, amplitude anomaly on the FARs in the geological interval, but you can kind of see how it fades off when you go left and right. That's an indication of, your sand quality is dissipating as you move off of that. The other interesting feature on here is kind of notice how it makes a little hump there. That's also a possible indication that we might have a pretty thick sand, that's being draped over. So geophysically, it's got the anomaly in the FARs in the geological interval, and that's what I like to see.
So again, we're going to cover the geophysics of it, and we're going to talk about nears, mids, and fars. What's the importance in this particular region when it comes to production? So here we're looking at our proposed location, which is a northern location. There is a southern location as well, potentially. But what are the nears telling you right now, Jared?
So here on the nears, what I like to see is those nears completely disappear, and to have a true AVO effect, you need to have your nears basically limited or gone, and then it's gets a little stronger in the mids, and then in the fars is what you want to see really lighting up, and here on the nears, we don't see anything.
Right
now on the mids, you can kind of see here that now you're starting to see, again, on the purple and the gold horizons, that you're starting to see an increase in the amplitude. So this is a sign of the AVO effect. So,
okay.
So far we're, it's looking good. And if we go to the FARs, now you see it's, you've got energy on the FARs all the way up and down that ARB line, from the prop lock 1 down to the updated prop lock 1 to that location, and then even further to the south. But that that's a good indication right there of having hydrocarbons.
Thank you very much. And so all of this work has been done to do one thing, and that's lower the risk for us, our partners, and everybody that's involved in drilling these wells to have success. And that's what we believe we'll have. And to give an example of this type of amplitudes, again, we referenced the Senior Nest. They were 9 of 9 using this type of technology. And this is one of those wells that they drilled, the Senior Ranch A2 and the Ranch A2W. Can you explain this map?
Yeah, so on this ARB line, this is a field that's a little further to the southwest from where we're at, but it's using the same technology of AVO attributes. If you look on the right-hand side, the red herring number 3, which found sand, but it was tight and uneconomic. There's practically nothing there on the FARs. And then when you move up dip, you see these really brightens up in the that lower Wilcox interval, and that's all that was pay. So this is a prime example of what works and what doesn't work.
So Josh, the numbers on that field are interesting, that they, in 3 years, they discovered it and had already produced 5.1 million barrels and 6.8 BCF. That's a wonderful field.
So would you think our goal is to duplicate similar to not only the Senior Nest, but also the Belichick field north where we have the Technic 5 and Technic 6?
Yeah,
That's our goal.
so what we were able to do was to buy the data set across this field and use that as a model, a test ground, to see what worked, what didn't work. And one of the reasons we chose this Senior Nest area is because it is a lower Wilcox channel type sand. It's at the base of the Wilcox section, which is almost identical to what we have at Hallettsville. And so we were able to make a model. That's where JR built sort of the tests. That we have multiple questions. And so the great well met he could check off every one of his boxes. That well did it, all the bells and whistles that we wanted. And the dry hole had absolutely none of the bells and whistles. So after that study, we went over to Campbell Creek, the Belichick area that you just mentioned, which was completely drilled without 3D, but we ran the same testing now that we have the data set, and we found that the best wells at Campbell Creek also ticked all the bells and whistles. So now what our plan to do is, instead of drilling 30% success rate at like at Campbell Creek, we're planning to take that methodology and apply it down here to the rest of the Burns Sand Channel area. And we're expecting some pretty high percentage success rate.
Okay, so all in all,
Yeah, I mean, at the end of the day, everything that we just covered, okay, leads us to, if you look to the right-hand side, the wells that Harvey was and Josh were just referencing, the Belichick wells, are up to the north on the right side of the pink fault. Okay, you'll see where it says 77 acres and 16 acres. That covers the Belichick wells, successful without a doubt, drilled without 3D seismic, just drilled basic 2D, down to the bottom, okay, where you see a 10 acres, 32 acres. The 32 acres is what the Convica number 1, the well we're going to be drilling, covers. Okay, so you can see there's a lot of anomalies. That's what they're called down in this area. A lot of them are on, or some of them are on land that potentially is problematic to get to, but up to the north, we're fine. And so we're going to be starting out with the Convica, and it's 32 acres in size, which gives them like Harvey said, gives them the ability to, start doing some estimating as far as the types of reserves that we could potentially discover. And if you look on the left-hand side, you'll see the Convica number 1, 32 acres, again, 11 BCF and about 500,000 barrels of oil is what we're looking for. But we want to take that to, the FAR AVO response, which is what this map on the right is actually showing. Okay, we want to take that response and apply it and go and try and duplicate, like Harvey mentioned, the very successful Senior Nest 9-for-9 drilling success. And we believe that the Convica is where we're going to start. And hopefully we'll be able to get out there, get it drilled in the next couple months, and bring in a very successful well that will lead to the development of this field, which, all those, listening in and watching, and we appreciate your time today. We'd love to have you part of it. The whole goal is to drill successful wells, give revenue to the partners, sure get some tax benefits, but revenue and long-term revenue streams is what we're looking for.
And so what this is an example of is what a position in our partnership would result in. And again, what we're going to look at is that these numbers are based on February 10th, 2021. Now, today's oil prices are $65 oil. What you have is 3 different scenarios for potentials. Again, $48 an oil price. We've all seen that, 50, and currently we are in the 60s. So what this would mean if with success is that we would anticipate a productive well between 200 to 3,000 barrels, 200 barrels of oil a day and 3,000 units of gas a day, equating to 349 barrels of oil a day. And as far as value for money goes, and we're looking at between $1,800 a month to $3,000 a month at $48 oil. And at the closer price we're at today, it's $2,000 to $5,500 a month in production for the invested members. And that could be as much as $33,000 to $67,000 on an annual basis. And then the overall reserves, again, we can calculate that a lot closer because of technology, is going to range between $190,000 to as much as possibly $500,000 plus with this particular well, depending on the longevity of the well and also production gotten out of it. So we can come in really close to those numbers. We feel very comfortable and confident we can do in moving forward with this prospect. But understand, oil and gas does have its degree of risk, but we believe 100% that we've done the best we can before we drill to manage that risk.
Okay, and really just to kind of wrap it up, the Convicta prospect has been mapped by Harvey and his team with subsurface geology and 3D seismic covering the lease acreage. The 3D seismic shows a 32-acre anomaly that has the possibility of yielding the 11 billion cubic feet of gas and 500 million barrels of oil from the burned sand. Now, we're not factoring in the Allen sands or the Simpson sand that could be above. This is just their calculation on the burned sand alone. So as Josh just mentioned, one unit could have an upside of almost 8 to 1 on a per dollar basis. But if you factor in tax basis, it could be up to almost 11 to 1. The tax benefits are what they are. You write off up to 80% the first year. You get, amortize the balance over the next 3 or 4.
And make sure you see your CPA about your tax benefits on it, because everyone it works different with. But the majority of cases, you save roughly 1/3 of what you invest in tax basis on your investment.
And in high tax states, typically it applies to your state taxes as well. But the goal is the revenue. We want the revenue. Tax benefits are great, but we want successful wells where you get depletion allowance 15 to 20% from off of your revenue that's generated for, for example, the Belichick 3 well we discussed. It's 14 years in production, still going strong. So we'd love to be able to call everybody in 15 years and say, hey, glad we got you involved in this project. Outside of that, that kind of wraps up what we're doing. We can kick it back to Sarah and Alan.
Yeah, thank you, Doug and Josh and Harvey and JR for really informative education in oil drilling and geology. And, we could see why you've been so successful over the years with your knowledge and abilities to kind of read all the exploratory data that you're able to capture, and that you've been so successful in this part of Texas. So it's great that you've got another big project ahead of you, and that high gravity resource is able to open this up to outside investors to join with both of you. Let me just ask you a couple of questions, and then we'll take a few questions from our audience as well. So And I know you covered some of this during your presentation, but just to briefly hit a couple of recaps, just tell us a little bit more about high gravity resources, how long you've been doing the oil drilling, and your key areas of expertise that you bring to this project.
Well, high gravity, as I mentioned previously, we started in 2012 as far as high gravity. Prior to that, we came from different sides of the oil and gas industry. Josh and I more on the financial side. The other partner, Greg, my brother, who was more on the industry side. So we combined our knowledge and started reaching out to industry contacts. Harvey was one of those industry contacts. Greg and he had met previous to that, but what we bring is industry relationships like we have with H.H. Allen and our other geologists that we work with, and we put together projects that we try and if the 3D seismic data is available, you want to be able to use it as long as you have the geophysicists that can interpret and put you on the money where you want to drill. But we believe we have that combination with HHL, with JR and his expertise. And going forward, this is not like the Convica prospect. There's potential for multiple wells to be drilled in this area. And so we don't want to just be a drill one and then we're done. We'd like to develop the field and have the people come back and invest again. A lot of times if it's on the same lease, your cost will go down significantly on the second well because you're not paying for the seismic or the geological costs. And so that's a good thing we pass on to our partners. Josh, go ahead.
And I said that the biggest thing we bring is that our industry knowledge about the oil and gas business. We know the important questions to ask Harvey. We've already asked those questions of the experts. So we are really digging in and finding out what it is necessary to be successful in prospects. Doesn't mean we're successful every time, but we know the questions to ask. We know the information we need to get. And if we can get that information and the questions are asked sufficiently, that we've increased our probabilities of success, we then move forward. So that's the biggest thing we really bring to the table is having that expertise to ask those harder questions, those detailed questions that the common guy doesn't have, and have those close relationships with the operators and geophysicists that are out there to bring product to public.
Yeah, that's really important, very important. Now, the region that you've targeted in Lavaca County, that's been very prolific. There's been a lot of big discoveries and big plays there over the last 30 years. Maybe you can just hit a couple of the highlights about that region and specifically about the specific location that you're targeting.
Well, I'll let Harvey touch on some of some of that as well, but it's just like real estate. It's all location. You want to drill where if you didn't have the seismic, you want to look and find other successful wells and drill close to them. You want to do a field extension and try and find what they found, but because the area is more complex because of all the faulting you saw on the maps, the brown lines, that is where Harvey and his team and JR and their expertise come in because they're able to use the 3D seismic to identify the faults. But as far as the history of the particular area we're in, Harvey, maybe you can give us a little more background.
Sure, be happy to. So once again, in the early 70s, 1972, actually, my dad and granddad drilled a well in the Hallettsville area. It was about 7 miles north of town, and it made a pretty nice gas condensate discovery, lower Wilcox sand. And at that time, natural gas prices were fairly well regulated at the federal level. and 35 to 50 cents an MCF was pretty much all you could expect. And my dad was one of the first oilmen to go down to Corpus Christi and negotiate a new gas contract, and we got a whopping $1.30 an MCF. And JR is laughing. But in 1972, that was a big deal. So we had a major breakthrough price-wise, and that well was parlayed into, we probably have drilled 100 wells in the Lavaca County area, many of them with other partners. One of our largest partners was a company called Newman Production Company, who was actually an entity owned by Alcoa, and they were looking for natural gas. So the heyday for natural gas exploration was in part going on in Lavaca County. There was this deep Edwards play I alluded to early at 14,000 feet. So there was quite a bit of natural gas being discovered, and we were in the forefront of that. Along the way down, though, in drilling these deep wells, we stumbled into, and that's the word we use, we stumbled into these deep, lower at the base of this lower Wilcox, these channel sand series, and many of the wells were thin. All of them were pressured, kicked us when we drilled. They were troubled. So they had been avoided historically, but once the deep drilling kicked off, then we had to drill through the zones. And sure enough, we lucked into finding some of these wonderful thick 150 foot thick, we call them boxcar sands. They have an interesting log profile. And those became then the crown jewels. We made more money drilling those wells than we did on that deeper gas play. And that's what happened at the Sinar Nest. That was a horizontal Eagleford play. And in the drilling of the deeper Eagleford, they saw what was the hints of what would become Sinar Nest. They had the 3D seismic and recognized it before they actually started drilling it. So they knew what they had before they drilled it. It turned into a really moneymaker. We now see the potential at Hallettsville, now that we have 3D, is to be able to duplicate not just development, low risk development, which we consider this to be, but we think we can go out and discover some more Sinar Nest fields, which would be pretty exciting. And
And we're talking,
yeah,
we're talking hundreds of millions of dollars that are potential in the ground out in this area. I mean, just north of us in the Belichick field, that field's produced over $100 million in today's prices. So there's a lot of value out there.
Yeah, that's really interesting. Now, with all the data that you've been able to extrapolate from all your experience in this region and this particular locations, what is the likelihood of commercial success? I mean, what's the odds of success? There's always risk involved, but seems to me like it's heavily in favor of an excellent project here. Maybe you can kind of comment on that a little bit.
Well, I'll comment first, and then I'll let JR weigh in. But so we've discussed geologically why this is a great project, and that based on simply geology alone, it merits drilling it. The 3D seismic and the AVO work that JR has been able to do elevates it. So not only can we project where the sand goes now for the first time, we can project where the sand will be geologically, but what JR can do now is investigate it with the AVO attributes and actually see hydrocarbon indicators. So I can put the sand where we're going, and JR can put the hydrocarbons in it.
Yeah, I think the key out here and through my career, what I was, when I was a young geo, and my mentors had always told me, you always want to have an analog. If you have an analog, it's that was one of the most important features. And in this area, we have several really nice looking analogs just on the data set. So I think for that just really helps alleviate some of the that risk, and that was always key, and I've seen it work over and over again. And we have an excellent analog with the Belichick wells and the Technic wells to the north, and we just want to extend that down to the south, and we're continuing to look in the immediate area as well. There's, other areas that we're looking at northwest, and so I think our, success rate here should be, fairly high. If we didn't have any analogs here, if we were, if this was a new area that hadn't been worked or hadn't been developed, then, that would be a risk that we'd have to, really look at. But I feel like, we have excellent analogs, and not just looking at the regular seismic data, but the fact that we have AVO data here, that makes it even better. So we feel pretty confident that we're going to find, commercial hydrocarbons in this location and in other locations that we're working on as well.
So circling back around to it, we're modeling the Signer nest. They were able to drill 9 for 9. We're not going to say we're going to be 100% successful, but we're expecting to be pretty highly successful.
That's great odds. So I know when you put some of the data together, Doug and Josh, the oil prices were $40 a barrel, and it was looking pretty attractive at 40, 45. Now we're at $65 a barrel. So what does that mean in terms of the expected ROI to the investors in the project and the potential returns, particularly, if oil can keep going up, a year from now, maybe we'll be at, $75 a barrel higher. And so what does that mean to the actual participants in this particular project?
Well, price means everything. Right? And if you just go back to November 3rd of last year, okay, oil was $37. So within 4 months, we've seen the price of oil, almost double. Natural gas prices are in the $2.50 range. Those vary, depending on the region, the state you're in, as far as what you get. But we're in a good area. We've our lease to the north has received very good natural gas prices over the years. But there's a lot of factors that, a lot of pressures on oil and gas. But if the prices keep coming up, obviously it improves the ROI. We can have, if we have $40 oil, we're still good, but if we can capitalize on $50, $60, $70 oil, then that just makes things better and quicker return for everybody involved.
Yeah, and I just want to make a direct point on this, is that this prospect was developed under $35, $40 oil scenarios. This was a drillable prospect at $35, $40 oil prices and $2.50 gas prices. This is something you would drill at those prices. So the mere fact that we've seen almost double those prices in oil, and we've seen an uptick in natural gas, and it just becomes more profitable for the potential partners. We're going to have fluctuations up and down, but the bottom line is this: the product has gotten better, not because just it's a great probability for success, but it's gotten better because the economics have gotten a lot larger on it just in a few weeks.
Yeah, that's great. Now, just highlight one more time the tax benefits that an investor in a unit gets in terms of, depletion allowances, flow through, depreciation, write-offs, that sort of thing. I guess that brings the cost of a unit from 57.5 down substantially with the tax benefits. Maybe you can just briefly, hit on that one more time.
Sure. The biggest tax benefit involved is the intangible drilling cost. So that typically allows up to 80%. It depends on somebody's tax strategy, but you can take up to 80% in the first year, or you can, if your tax strategy is, it's better to amortize over 5 years, then you amortize it evenly over 5 years. It's all relative, but you get to write off 100% of the intangible drilling costs in the well, which is a great majority of the cost. So for example, on a 57,500 unit at 37% tax basis, you're saving about 17,000 if you take 80% of the first year, if you're in the top bracket. So it all depends on your effective tax rate, depends on your state taxes, but typically the accredited investors are in the top brackets and will be able to benefit from it. It's an above line deduction. Depletion allowance is based on the once you get the well in production, it comes from the revenue, 15 to 20% tax free on the revenue side. So
Yeah, and we have a great accounting company that we work with that provides all the key ones for all of our partnerships. And so, it's a complete pass through to the investors. There's different ways an individual can come in. It's active ordinary income. As a general partner interest, you can be a limited partner interest. So there's several different ways a person can attack their taxes associated with this type of investment. However, we do this not for tax benefits. We do this for the profit.
And if anybody has a tax question, that maybe their CPA doesn't know and would like to speak with our CPA, he's more than happy to give his insight and share how it could be a benefit to him.
That's great. I'm going to turn it over to Sarah now to open up a couple of questions that I think have come in from the audience. And then once we do that, we'll kind of wrap it up.
Okay, thank you.
Sarah, go ahead.
Thank you, Alan, and thank you all for the excellent presentation. So most of the questions that came in have been covered. A few of them were on taxes actually recently. But I have 2 to 3 questions that still haven't been covered. The first question is in regards to your operators. The current operators that you're working with, have they collaborated with you on previous projects?
Yes, and I'll let Harvey work with that because the Inland Ocean is a company that Harvey's worked with, and we as a company have worked with in multiple wells. We currently have multiple wells that are productive with Inland Ocean, who will be the operator. So yes, we've got a lot of experience with them. And tell you what, the Technic 6, which is in that region, is a very effective and very economical well. Its operating costs are at a very minimal amount. I think averaging maybe $2,000 to $5,000 a month in costs, and generated some months over $150,000 in revenue. So per month. So.
Okay. Okay, great. And then JR, you mentioned the analogs reducing the risk significantly. Is this unique specifically to this project?
No, it's, I've used that in my previous prospects that I've drilled. I think that having an analog is always a key thing that I always wanted to see, and our, the groups that were drilling with us, it gave them a sense of comfort knowing that, this has worked before, and so it, the analogs, it's not a unique thing, just here. It's just I like to put I put a lot of emphasis on that, and it's just the way I've done things in the last 15 years of doing this, and I think it's key. It's key to have the analog.
Okay.
So if I may, I chime in behind. JR did the geophysical work for a competing company before we stole him away. And they drilled, 25, maybe 30 wells in county to the south, Wharton County. And the best well in that 30 well program, and there were several other geophysicists involved, but JR takes the credit for the best well in that program. This is in Wharton County. And once again, he modeled from successful wells and duplicated the model, and that's the analog process he's talking about. So he comes with a wealth of expertise, not just with Wilcox, but with other formations, but all across South Texas.
Okay, thank you for that. And then the last question is just in regards to investors. Have you had, have any previous investors come in? Any previous investors come in on this round?
No,
We're just opening it up, but there will be, yes.
Okay, all right. I think that's pretty much sums it up. So I'll pass it over to you, Alan, so we can wrap.
Okay.
and And again, we're not the only investors in the well. I just want to say that Harvey has other groups that have also participated in the prospect too. So we're not the only investors in the well.
So,
So,
Sarah,
yeah,
I'll-
so both High Gravity and H.H. Howell and some of your affiliates are investing in this particular project
That's correct.
and have hard money in the deal. So that's
Alan,
good.
I was going to just comment. So High Gravity has a percentage interest that we make available to them because of our ongoing relationship, and that's what they have in this project. But the rest of the ownership is what I call my usual suspects. So we've got a lot of repeat business, and they're very excited about this well. In fact, we just staked the location yesterday, and we're excited about getting on with it.
That's fantastic. Well, we're going about an hour and 15 minutes. We're a little bit over what we normally allow, but this has been a really fantastic opportunity to learn about the oil and gas industry and the geology behind it and how to go about prospecting a well. And I think, having known you fellows for a number of years and seeing your success, I think this is an excellent opportunity for our subscribers and followers to get involved, and wish you guys all the success in the continued drilling prospects here and the production. And we look forward to hearing more about your progress as this moves forward. So again, I thank you everybody for today's webinar. We're going to send around a letter tomorrow morning to everyone who had registered. So if people miss this, if they registered but missed this, they'll have a chance to hear the replay and also to have links to some of your information and to Doug and to Josh. And we will look forward to following up with you. So thank you, everybody, and
Appreciate you too.
appreciate the education today. Thank you. Thanks, Harvey. Thanks, JR.
Good.
Thank you very much. Take
Y'all
care.
take care.
Thanks,
Take care.
Sarah. Okay. Bye-bye. Thank you, Mark.
Okay.